Good morning. This is Larry McMillan with a stock market update on Monday, April 12th, before the market opens. Well, the S&P roared away to even higher highs last week, and its chart is clearly bullish in that its momentum is upwards. All its moving averages are pointing upwards. It could be considered to be a little bit overbought, though, since it has risen above the 4 standard deviation modified Bollinger Band, but that in itself is not a sell signal. The support levels have been left in the dust, though. The first support level is the March highs at about 39.85. So we're about 140 points above that, which kind of leaves an air pocket under here if there were to be some sort of even minor bad news. But that would not change the fact that the chart is bullish. The equity-only put-call ratios are on buy signals as well. The weighted ratio in particular has turned down sharply. As we mentioned last week, that buy signal has quickly arisen, and that ratio is dropping very quickly. The standard ratio is also on a buy signal, but it's at a much lower level, meaning really that both are overbought. But again, overbought doesn't mean sell. They wouldn't be sells until they start to rise. So that's another bullish indicator. Breadth is a little bit dicier, though. Our breadth oscillators are still clinging to buy signals right now, and that's okay. But with S&P breaking out as it is to new all-time highs on almost every day, we'd expect to see the breadth oscillators doing better than this, but they're not. And in addition, a negative divergence is setting up there in that we haven't had a new all-time high from the cumulative breadth indicators, at least those using stocks only data, since March 15th. So we're coming up on a month now that those haven't been able to make a new all-time high, whereas SPX itself has made a new all-time high 7 times in the last month. So this kind of negative divergence can persist for a while, but usually it results in something not so good. So the point is that when these negative divergences exist, it is imperative to not ignore sell signals. You want to stay alert and take sell signals when they arise, but only, of course, when they're confirmed. New highs continue to outpace new lows by a pretty good distance, roughly 200 and something to almost nothing, let's say 10 or 15. So that's still a bullish indicator for stocks as well. Volatility, that's been a bullish indicator for quite a while and remains so. VIX is making new relative lows now, down around 17. And once it's broken down here below 20, it certainly looks to me like it's probably going to go down to the old 12 to 14 level before things get really negative on the VIX front. However, we're always staying alert there, so if VIX were to pop up quickly, then that might reverse things. But for right now, VIX is the trend of VIX is down, and that's bullish for stocks. Also, the construct of volatility derivatives, meaning the term structure of the futures and the CBOE volatility indices, those are remaining sloping upwards, and that's bullish for stocks too. So in summary, we don't really have any confirmed sell signals at all right now. Breadth probably would be the first one to capitulate, and then perhaps the McMillan volatility band sell signal might follow that. But for right now, the indicators are bullish. So we're maintaining a core bullish position. We're rolling strikes up as the market advances, so that we're taking in some credits and reducing our downside exposure, but we're still staying long. We will take bearish positions around that core bullish position if we do get confirmed sell signals. So I invite you to visit our website and perhaps subscribe to our newsletters, because we keep you up to date on these developments each day. Meanwhile, have a great week and good luck trading.